So welcome back in the next lecture of public finance reforms. In today's lecture, we are going to discuss the value added tax. So VAT is the precursor of GST. We have this VAT system since 1986. On the recommendations of L.K. Jha committee, the MODVAT came in India at the union level. So VAT, what exactly VAT means? VAT means the value added. So whatever is the value added, suppose the value of the output in this table, suppose the value of the output is 20 rupees and the value of the input is 10 rupees. Suppose somebody, this company, they purchased the plastic, they converted this plastic into this pen. Suppose the price of the raw material is 10 rupees and the price of this marker is 20 rupees. So the value addition done by this company is 10 rupees. So that is known as the value addition. And if you are taxing only the value added, such type of tax is known as value added tax. But whatever is being produced in India, you have to pay one tax, that is known as the excise duty. So we have excise duty also and we have VAT also. They are complementary to each other. It means if the excise duty is being levied, then no VAT will be levied, because VAT is, in this case, for example, in this example, there are 4 stages under which there are 4 producers. First producer is the farmer. Farmer is producing wheat. This is the simplest example to understand VAT. Farmer is producing wheat and the input cost, the cost of fertilizer and all these things is 10 rupees. The output cost is 20 rupees. Farmer is selling in 20 rupees. So the value addition is 10 rupees. Then we have excise, then we have VAT, and then we have the MODVAT, which came in India. We don't have exact VAT system at the union level. We have only the MODVAT system, which is replaced, and now it is known as the CENVAT. Anyways, so the excise duty. So excise duty will be levied on the output. Whatever item you are producing, on that item, you have to pay some tax on the value of the output, and that is known as the excise duty. So suppose this is the marker. So first of all, a raw material you are going to purchase in 10 rupees. That is what the plastic is. Then you are going to add something. You are converting, you are mold this particular plastic in this shape. And suppose you sell it to this company Camlin. And this Camlin is going to inject some ink and all this coverage, and finally they sold in the market in 30 rupees. So 10 rupees value addition is there. Similarly, in this example, the value addition is 10 rupees at the first stage by the farmer. At the second stage, at the stage of miller, suppose the miller finally selling is the flour, and whatever is the output cost of this will be the input cost of this. So the input cost is 20 rupees and finally the output cost is 50 rupees. Suppose the miller added few more nutritious ingredients in this particular wheat, so that increase the value of the output, and so the value addition is 30 rupees. At the third stage, suppose this flour is being purchased by this baker. Baker converted this flour into cake, and the input cost again will be the output cost of miller, that is 50 rupees, and the output cost may be 80 rupees, and this is being purchased by the shopkeeper. Shopkeeper is doing some advertisement and all, and finally selling in the market at 90 rupees. So the value addition during these 4 stages, at first stage it is 20 minus 10 means 10 rupees, 50 minus 20 is 30 rupees, 80 minus 50 is 30 rupees, 90 minus 80 is 10 rupees. And we discuss excise is being paid on the output. Whatever item you are producing, it does not depend on the intermediate item. This flour is an intermediate item for this final cake, but this wheat is an intermediate item for this final cake. But still, these items are different. If they are distinguished, you have to pay tax on these individual items. This was the scenario under excise duty, because excise is being paid on the goods, whatever goods you have. So this 2 rupees excise duty will be on the output cost. Suppose in this case, one of the finished product is wheat, so you have to pay 2 rupees, 10% of 20. Similarly, if the excise is 10%, so the excise duty at second stage will be 10% of 50. At third stage it will be 10% of 80, and at the fourth stage it will be 10% of the value of the output. It means 90. So it will be 2 rupees, 5 rupees, 8 rupees and 9 rupees. Cumulatively, the government is getting 24 rupees as the tax if one particular cake is being sold in the market. And whatever the tax that will be added in the price of this thing and some commission, and finally it will be sold in the market. Then this concept VAT says VAT will be levied only on the value addition. If value addition is 10 rupees at this stage, VAT will be levied only on the value addition. It means suppose the VAT value is also, the rate of VAT is also 10%, it is 1 rupee. 10% of 10, similarly 10% of 30, 3 rupees. 10% of 30, 3 rupees. 10% of 10 is 1 rupee. So finally it is 8 rupees. Now you can ask this question that at this, when there was excise duty, the government was getting 24 rupees. When the government will implement VAT, the government will get only 8 rupees. It means a loss of 66%. Then why government wants to implement VAT? What is the need? Why don't government wants to continue with the excise duty? Because here the government is getting more money. The government is collecting more tax. But in this case, the government is collecting less tax. Then why there is need of reform? The reason is, in case of indirect taxes, there is a lot of tax evasion. Suppose this farmer or this miller or baker, they are not maintaining any register. If they are not maintaining any register, they are not giving any receipt to this farmer, baker is not giving any receipt to miller, and shopkeeper is not giving any receipt to this baker. Then in that case, maybe this baker can say that I purchase in 30 rupees and I am selling in 40 rupees. Although the transaction will be of 80 rupees only, but because no receipt is being maintained, so this baker can decrease the tax liability by making it 40. So if it will be 40, 4 rupees you have to pay. So although numerically or theoretically the tax collection in case of excise duty is high with this example, but practically when it comes to the ground, when it comes to the macroeconomic level, actual tax collection is not good, because there is a lot of tax evasion in case of indirect taxes. That is why government wants to implement this VAT. In case of VAT, value addition will be done by the government officials, and finally on this value addition you have to pay some tax. But giving this huge task of finding out the value addition by the tax official is a highly cumbersome task. The government officials, they are not trained enough. They don't have that much of the knowledge to do, or the economy is not much specialized to calculate the value of value addition. So what the government did is, in case of India, because India is also known as the jugaad country, whatever we have, if we don't have the GSLV, we will sell through PSLV only. Geostationary satellites will sell through PSLV only. Although right at present now we have a successful indigenous GSLV launch vehicle, but still in case of India we can do some jugaad. So the thing is, the jugaad was this MODVAT. We started this MODVAT in 1986. So I think we discussed what is excise, what is VAT. VAT is only on the value addition. In case of excise, you have to pay the tax on the output. So the MODVAT says these producers, they have to pay tax on the output only, just like excise duty. You have to pay the tax just like excise, but you will get a rebate on the input cost. It means they have to give 2 rupees to the income tax official, but the government will return this 1 rupee later on. That is known as input tax credit. So some tax credit will be given by the government to you. But when? Why the government will give you the tax credit? It is a kind of incentive given by the government. But for VAT? But for what reason? The reason is tax compliance. Here it is. Suppose I am saying this baker is there. So in case of excise, the tax liability of the baker is 8 rupees, but under VAT it is just 3 rupees. But we have not implemented this VAT because the government cannot find out this value of 30 rupees. So the government outsourced this thing to this baker only. And how it is working is, government will say, you have to pay tax on the output. It means on 8 rupees you have to pay tax. So you have to give me 8 rupees. I will give you 5 rupees back if you can show me the tax receipt of this miller, the miller from whom you have purchased this particular floor. If this miller has paid the taxes, so this miller must be having a receipt that this miller has paid a tax of 5 rupees. If this miller gives this baker this tax receipt, and the baker produces this tax receipt to the government, so government will refund this 5 rupees to this baker. Let's discuss it again. This baker has to pay tax on this, full tax of 8 rupees, just like excise duty, it's same. But this baker will get 5 rupees back. And how this baker can get this 5 rupees back? By purchasing the flour, this flour, from this miller only. This miller means the miller which has paid the tax. If this miller has paid the tax, so this miller must be having the tax receipt that this miller has paid 5 rupees tax, then got the input tax credit of 2 rupees, finally paid 3 rupees. But some tax receipt will be available with this miller. If this miller will give that receipt to this baker, and that this baker shows that 5 rupees receipt to the government, government will refund this 5 rupees. Can you see the chain? Whatever this chain is, the government is incentivizing that each and every individual in this chain should pay the tax. Otherwise this baker will not purchase from this miller. This baker will purchase from that miller which can give him a tax receipt of 5 rupees. Because if this baker will not show the 5 rupees tax receipt, the liability of this baker will become 8 rupees. So because of the personal incentive of this baker will purchase only from the miller which can give him the tax receipt. And because of that, this full chain, it will be streamlined. So it is a very good tax incentive. It's a very good system started by the government, under which there is an inbuilt tax incentive for the tax compliance. It's not like somebody else money this baker will get. This baker has to pay 8 rupees, but this baker will get 5 rupees only and only if this baker is purchasing from that miller which has paid the tax. Otherwise, there is a loss of 5 rupees. So this is what the MODVAT says. So MODVAT is a good concept. But the problem is, there are lots of problems, there are lots of disadvantages. We'll discuss later on. So now we'll discuss the advantages. So the first advantage is it reduces the tax evasion. And how it reduces the tax evasion? The first thing is cross check. Now, because this baker is submitting the documents or the records being maintained by this baker itself as well as the miller records. So tax officials, they can cross check. They can cross check what was the value of the output of this miller and what is the value of the input of this baker, what is the output of value of this baker. All these things can be cross checked. So more information will come to the income tax officials, and when more information will come, they can anytime cross check it. So this is the one advantage, and when they have the option of cross check, it reduces the tax evasion. The second thing is more important. The second thing is it promotes the specialization. This MODVAT, it promotes specialization. How it promotes specialization? I want to make one change. Suppose there is one more stage added. There is a new person which came, baker 2.0, and what is the work of this baker? This baker will add cherry to this cake, cherry cake. So these 80 rupees will be the input cost now, and suppose the output cost is 85. So the value of value addition is 5. The value of excise is 10% of 5, sorry, 10% of 85, that is 8.5. So the new total tax collected under excise will be 24 plus 8.5, that is 32.5 rupees. In case of this VAT, here it is 80 rupees, 85 rupees. Similarly, now it will be 85. It's not 80, it will be 85. So the value of VAT will be, it is 10% of value addition, it is 0.5. 10% of 5 is 0.5. And finally, the MODVAT also, on this 85 you have to pay tax. It means 8.5 minus 8 equals to 0.5. Similarly, at the fourth stage, at the shopkeeper, the input cost will become 85. it's not 80, it becomes 85. The output cost is same 90, but the value addition is not 10, it is 5. So excise duty will be 9 only, because excise is being paid on the output cost, but the VAT which is being levied on the value added, it will not be 1, it will be 0.5, and finally it is again 0.5, but MODVAT will be same 8 rupees. So can you see it? This value of MODVAT, the tax collected by the government, is same irrespective of the number of stages, and when the number of stages increases, specialization increases, and specialization is good for any economy. Suppose on super prof there is only one faculty which is taking classes of 4 subjects: economics, polity, history, art and culture. 4 subjects are being taken by one faculty. So that option will be good, that faculty will be having more knowledge, or individual specialized faculty, of course specialized faculty. So specialization is good for an economy. When specialization comes, efficiency increases. But in case of excise, during the era of excise, now the tax is 32.5. so this 32.5 will be added in the final price. So this plus this will be there, and finally there will be commission. So the market price of this item will be 90 plus 32.5, that is a minimum 122.5 is the market price. And when the market price of Indian items they are increasing, people will import. So the competitiveness of the Indian commodities, that may decrease because of the high value of the excise. But in case of MODVAT, the tax collection is 8 only. So the final value of the commodity will be 90 plus 8, that is 98, irrespective of the number of stages. So this is one of the major benefit, the most relevant benefit of MODVAT system is it promotes specialization, and specialization is good for any economy. Then the next advantage is it is highly efficient system. The under one, because that was not transparent, so because of non-transparency, the excise system was not efficient, and this system is highly efficient system. The next one is it decreases the effective tax burden. Earlier this baker was forced to pay 8 rupees, but now this baker is forced to pay only 3 rupees. So the effective tax burden, it got distributed among this shopkeeper, baker, miller and farmer. So it decreases the effective tax burden, and when the effective tax burden decreases, lafe count came into picture. Lafe count which says if the tax rate is optimal, it is optimum, then only the tax revenue will be high. Then this inbuilt incentive we already discussed, and then we will discuss the disadvantages of this VAT, or we can say the MODVAT. At the union level we don't have any VAT system, we have the CENVAT system, which is the new name of MODVAT. So the disadvantages, it is highly resource intensive, because here we can see this official has to cross check the record. To cross check the record, this baker has to maintain the records. So computerization of data is relevant, maintenance of record is relevant, as well as the tax official, it should be trained. So all these are the crunches in any developing economy, all these are the hindrances, and because of this VAT is regarded as highly resource intensive. Because think about a situation in case the electrification, right now we know 50,000, more than 50,000 habitations, they don't have 40,000 habitations, they don't have electricity. I know what is the definition of electrification. The definition is the panchayat, ghar and all these things, if they have the electricity, or the 10% of the households they have electricity connection, then that particular habitation is regarded as electrified. This is the definition. Irrespective, 90% households they don't have the electricity connection, but still that habitation will be regarded as electrified, and we have roughly 6.5 lakh habitation. Even such liberalized definition of electrification of habitations, 40,000 habitations they don't have the electricity connection. So if one habitation is there, one person is there, one baker is there who is having a bakery in such areas, forget about the computerization of data. They don't have the electricity, they cannot maintain the data. And in case of India, 40,000 of 6.5 lakh, which is a big figure, roughly 8 to 10%. So right away you are excluding the at 8 to 10%, plus few other, because it's the literacy rate of India is very less. So if suppose one of the best occupation for an illiterate person is they can start their own business, they can start their own shop at least. So it is a highly resource intensive thing, but because of all these other crunches, that has not been successfully implemented in India. The second one is the value addition estimation. So again, the value addition estimation is not possible for the tax official. That is why we have not implemented the VAT system, and we have implemented the MODVAT system, the modified VAT, under which this will be maintained by the shopkeepers only. The tax official, they have outsourced it. Then the next point is the MODVAT and the CENVAT. I think we can rub it. So under this MODVAT versus CENVAT, so MODVAT came in 1986 on the recommendations of L.K. Shah committee, but MODVAT was only in 1986, there was no service tax. So the MODVAT which was implemented or started, it was started only at the manufacturing stage, and manufacturing of goods only. And manufacturing of goods, earlier we had excise. So MODVAT has replaced excise duty only. But it's not only the excise duty which you have to pay. Then came the service tax in 93-94, and service tax was there and MODVAT was there. So this MODVAT, it has been replaced by CENVAT in 2000. And in 2004, services and all, they will be added in the CENVAT. So the scope of this, it has increased using that CENVAT. But still, CENVAT is different and the state level VAT is different. That we will discuss later on. Because state also levies some tax. For example, we have sales tax. Then you can have the retail tax. Then you can have the wholesale tax, wholesaler tax. So all these different taxes that you have to pay. So it causes tax on tax. For example, that we discussed. In that example, suppose the value of the output is 5, earlier it was 2 rupees, then 20 rupees, and it was 50 rupees, and it became 80 rupees, and then finally it became 90 rupees. So it is a tax on tax. You have already paid on this 50 rupees, but still at the next stage you have to pay on this 50 as well as 30 new, rather than paying only on the value addition. So this is known as a tax on tax. On this 20 rupees you have already paid, but when you have created a new item, that is known as floor, on this floor, you for 20 rupees of this floor you have already paid the tax, but still because it is a different item, again you have to pay the excise duty on this 50 rupees. So this tax on tax, cascading of taxes, double taxation, that was one other major problem of the excise duty. So when this MODVAT came, so tax on tax, it decreased, because only on the value addition you are paying the taxes. Then this CENVAT came. Again, there are a lot of negatives of CENVAT, which we will discuss when we will discuss the GST. Because what is the need of GST is what the limitations of the CENVAT. Then the state level VAT. So state VAT came into picture. Let's draw this diagram. If it is any economic activity, if this economic activity, either there will be production or there will be distribution. So as per the constitution, as per article 246, as per the schedule 7 of the constitution, production is under the union government and distribution is under the state government. So on production of anything, even if you are producing goods or services, only union government can levy the taxes. So this can be good or this can be services. Similarly, the distribution stage, earlier we had that sales tax or retail tax or wholesale tax. Different taxes were there. So in case of goods, earlier we had excise duty. Excise duty for majority of the commodities has been replaced by MODVAT, and MODVAT has been replaced by CENVAT in 2000-2001. In case of services, service tax came in 93-94. All these are the indirect taxes. In case of this thing, they have been clubbed together and state VAT came. Now there is a problem. Suppose you have already paid a tax on this thing. You are producing something and you have already paid, suppose once this is being produced, you have already paid. Now this is the price after production. Now you have to sell it. In this 20 rupees, suppose 5 rupees is the tax and 15 rupees is the price of the raw material or the finished goods. So the finished goods price is 15 rupees, tax is 5 rupees and final price is 20 rupees. Now you have to sell this particular item. So sale will be under the jurisdiction of the state. So now state is going to levy the state VAT. But state VAT you have to pay the tax on this full 20 rupees. It will not be only on the 15 rupees. It means because this tax is being levied by union government, this tax is being levied by the state government. So in this case, no value addition is going to take place. To union government you paid 5 rupees tax, but sale tax will be, for example, there is 5% sales tax. So this 5% of 20, it is not 5% of 15, but ideally it should be 5% of 15 because the raw material cost is only 15. It is the tax of the union government which is making the price of this pen as 20 rupees. So again here is tax on tax. Even though we have MODVAT and at state also we have VAT system, but because the tax is being levied by both the bodies, union government as well as the state government. So union government first is going to levy the tax, then this is the price. While selling, while distribution, you have to pay the tax to the state government. So this is 5% of 20. So this is a major problem. Now this problem will be removed once we have GST. Anyways, we will discuss this thing under GST, the features of GST. But this state VAT is there. When GST is going to come, all these things will be subsumed in GST. So once GST will come, there will not be any CENVAT, service tax, state VAT and all these things. Majority of the indirect taxes, I am saying majority, not all. Majority of the indirect taxes, they will be subsumed by GST. Now, who is going to levy the GST? Because India is a federal country, so we adopted the federal feature like CGST, central GST and SGST, state GST. So union government is also going to levy the GST as well as the state government is also going to levy the GST. We will discuss all these things in detail because GST is highly relevant from exam perspective. The next one is the limitations of VAT. So we discuss VAT system came, VAT we have the modified VAT or the CENVAT we have at the union level, and at the state level we have the VAT system. But what is the negative of this? What is the limitation of this VAT? So majority of the limitations we will discuss while discussing GST. But one major thing is, suppose you are producing something in Maharashtra and you want to sell that item in Delhi. So whenever there will be interstate trade, in case of interstate trade, you will not get any input tax credit. We discussed you have to pay the tax, but the government is going to reward back some amount of money. That some amount of money is known as input tax credit. In case of interstate trade, there is no input tax credit. Maharashtra government is also going to get some sales tax. This Delhi government is also going to get some tax. So there is no input tax credit system in case of interstate trade. On that you have to levy central sales tax. So there is no mechanism of input tax credit in case of central sales tax. But once GST is going to come, then in that case all this process is going to be changed. a new process is going to come, that is known as IGST, integrated GST. Anyways, we will discuss few other features of GST, the need of the GST, the history of the GST, few international examples of GST, in which all country we have GST, then the salient features of GST, then the constitutional amendment, which all articles will be amended, then what is GST Council, then the issues that are going on in GST, what are the positives of GST. We'll discuss all these things in the next lecture. Thanks a lot.